I'm Matt Bishar with REIT.com, and I'm here in New York City for REITWeek 2012, NAREIT's Investor Forum. Joining me is Dennis Gershenson, President and CEO of Ramco Gershenson Properties Trust. So, in your opinion, how are shopping center fundamentals shaping up for the second half of this year?
Well, we're very pleased with the acceleration and interest of the tenants. We've just returned from the International Council of Shopping Center Conference. We saw an acceleration of tenant interest at the beginning of the year, especially the national retailers, not just anchors, but smaller tenants open to buy. And we are very pleased to be making multiple deals with the same retailers. And these retailers have expanded their footprint into the 5,000 and 10,000 square foot spaces, such as the Ultas, the shoe Carnivals, Five Below, people of that ilk. So we are seeing a real acceleration. However, it would be a mistake to just make the assumption that, we're back. And so we're cautiously optimistic.
Now, picking up on that cautious optimism, there does seem to be a lot of kind of back and forth in terms of news about the economy. If the situation does take a turn for the worse, what can or should a property landlord do to kind of weather that storm?
Well, let's start with the fact that even though some of us may consider this latest downturn more difficult than the ones in the past, anybody who has been in any industry for some time has seen many recessions. So that the basic rules should apply going forward as they did in the past. And that is, stick to your blocking and tackling. Make sure you, put something away for a rainy day. Don't be overly optimistic, especially as far as financing is concerned. Be conservative in your financing decisions. And then just be prepared for more difficult times so that you don't get too far out over your skis.
And last question, what are you seeing in the way of acquisition opportunities? Are assets coming to market? Are they fairly priced, overvalued? What are you seeing in your markets?
Well, there isn't any question that we're seeing an acceleration of acquisition opportunities. I think that the acquisition market ultimately is rather efficient, which means that I don't care how much you want for your asset, the marketplace and the number of bidders are going to be the ones who will come in and help determine that. On the coasts, you're seeing some very, very aggressive pricing. We'll have to wait and see whether or not that justifies itself. We prefer to play in the middle of the country, which is anything west of the Hudson, say, and east of California. And we're finding cap rates there are much more favorable, and more in line with your cost of capital. In May, we purchased $108 million worth of shopping centers, 2 in Colorado, 1 in Wisconsin, and one in St. Louis, Missouri. As a matter of fact, the St. Louis, Missouri acquisition was the 3rd center we bought in St. Louis in less than a year. We've now invested $100 million in St. Louis. And we're very pleased to say that we followed that up almost immediately with an equity offering, which was very well received in the marketplace. So consistent with your second question, which is to make sure that we continue to produce a conservative balance sheet. About 75 to 80% of the capital that we needed for the acquisitions, we did raise as equity.
Well, thank you so much for joining us today, Dennis.
Thank you for having me.
And more from REITweek 2012, be sure to visit REIT.com.